if that does indeed happen, buckle up, because California can take over the world.
California is the state will say, like, don't worry, we're not trying to make your life more difficult. And you're like, well, I have a feeling there's some new legislation coming. On today's episode of the Real Estate Anonymous podcast, we are headed out west. Going out to Venice Beach, we're going to take a look at a Frank Gehry designed office building with a well-known credit tenant. It's got tons of vibes. It's the kind of place you want to be. And before we dig into that, we're going to talk about distress in the multifamily space, former retail distress, and maybe some projections about what the future may hold. So stick around. Good morning, good afternoon, good evening. Elliott White, Brett Moss, Eric Weatherholt back for another edition, and thought episode 52 or whatever this happens to be might be the right time to give perhaps a little background on who we are. So I'm an affordable housing developer and investor. We manage an investment fund. Brett is a Class A multifamily broker from the great state of Florida, though does projects in a variety of markets. And Eric Weatherholt,
working in Class A properties.
Yeah, that's well said, Eric.
Yeah. And Eric Weatherholt, aside from running HUD and being the Dos Equis most interesting man in the world, is a professional retail developer. I think professional is the correct term, and a connector of individuals. A bit of a Renaissance man. Is that fair, Eric?
That's right.
I think that's fair.
I fancy myself a professional introducer.
Yes, I think that's a appropriate title for you. So if you've been sticking around this long and haven't figured out what the hell we do, I thought a quick overview might be helpful. So we were chatting a little bit before we started recording, talking about the foreclosure landscape, specifically multifamily. I can only speak to that arena with some level of conviction. Eric, we're seeing on our side that a number of the deals that were syndicated, sold in 2020, 21, 22, a lot of those are in trouble. I think that's well known. That's not new news. Many of them now have gone back to the lenders, and the lenders are now finally starting to sell. They are meeting the market, not all of them, and not in a big slew, but you're really starting to see it bubble up. So we can talk about that a bit, but I'm curious, did any of that stuff get sort of gobbled up in the frenzy the same way, or is that space a little bit more insulated and perhaps people in that space can do math a little better?
You know, high quality retail properties have been interesting to watch. My first job was working, this is the early 90s, working for a group that helped life insurance companies that were foreclosing on retail properties. And so it was like New York Life and Aetna and all these people that had made loans on retail, and that stuff was coming back daily and all over. And it was fascinating to see behind the scenes of like, how did you give this person money? And how did this deal happen? And then it would come back to these lenders, and they were so overwhelmed that it was like they had no capacity or staff to deal with them. But they didn't want to, at that time, they didn't want to give it away, but they would have. But if there was not an active offer on it, they were like, do whatever it takes to make it as valuable as you can. And you tell us what to do, which was a fascinating place to be at, 22 years old and and making it up as I went as well. But there was so much volume of that stuff that it was crazy. Anyway, I thought the same thing would have happened in the financial crisis. I was also sort of waiting for that. And there was very, very few. We picked up really 2 properties out of all that we thought were great, but they were at a slight discount. And then this last round, anything of quality just hasn't. There's very little that's come out of this. I mean, there's you see distress kind of at the edges with land or some sort of flawed project or a special use building or those kind of things. But anything that's well located with that's appealing to to good retailers, and if anything, they've become more valuable over the last 6 months.
Brett and I were both nodding with smiles on our face as you talked about people you meet and you think, how the fuck did anyone ever give them money? I've met a number of people in the multifamily business where I think, I'm not convinced this gentleman can read or write. I don't know how he convinced folks to give him any money at all. It's been fun to watch. So anyway, that stuff is starting to bubble up. We made an offer on a portfolio. And we may have talked about this, but I made a negative offer where I said the seller is going to pay the buyer to take the asset. And that's a real offer, by the way. That deal is completely fucked, and that's what it needs. But we're seeing it more and more. And so if there's any kind of takeaway to listeners, there's so many of these that if you're looking at a deal built in 1984 in Atlanta and it's distressed and for some reason the lender doesn't quite want to get to your price, just wait for the deal across the street to go through the same process. Like, there's no rush. There are more sellers than buyers of this kind of stuff, and I'm telling you, patience will be rewarded. It's a shitload of fun. I mean, we are buying a deal that last traded for $38 million. The loan balance is $28, and we are under contract at $19.
So an $11 million loss to the lender, no equity, and a 30%
equity is smoked, debt fund. Yeah. And I mean, they're not all like that, but it's a deal down in the Southeast that we think is pretty interesting, and it's not like an anomaly. I think more of that stuff is going to come around. So be patient.
I think a lot later than most people thought too. Like, it does feel like we're kind of at a point where we're seeing brighter days ahead for those of us in the commercial real estate business, especially in the capital market side. But I think everybody's been surprised maybe it's taken this long. But it does feel like the snowball is picking up steam.
Well, I think there's kind of a diverging thing happening at the same time. Decent real estate in good markets that isn't in trouble is starting to trade again. You're starting to see some activity. Brett, you probably see this on the BOV side. Some of those folks are looking to transact both on the buy and the sale. But also, I think what's happening is as the market is moving on, the lenders are now realizing we've got to move on from this stuff. We have to get out. And so there's a separate path of deals that really are in trouble that are now starting to be sold at prices that reflect the trouble. It's not all over the place, but we're starting to see it pop up. So I'd keep an eye out for sure.
Our friend, and resident smart guy, Elliott, you can find him on the Twitter. He's very much of the belief that there was a lot of money raised that has solved and softened a lot of these problems, sort of 2020-ish kind of raises. That pulled things out of the fire from before that. And then that investment period is starting to wind up, over the next few years. And that as that big, as that golf ball works its way through the snake, there is going to be less capital available. And that's when the real opportunity can be found. But again, there's many of us, me included, who's been waiting for those big opportunities for 15 years.
Yeah. I would encourage anyone, we talk about it all the time. I always say, do you fundamentally understand why people want to live here? And as you're buying these distressed deals, there's still residents who want to live there. You have to fix them up, but make sure that your plan is not, I'm going to be the guy who puts in the granite countertop and the stainless steel and raises rents $200. Like, don't make the same mistake again. Just ask yourself, why do people want to live here? And then deliver the product that they want.
Right.
Don't do a bunch of stupid shit. Don't try and renovate a bunch of deals in College Park. Like, what the fuck are you thinking? Anyway.
I live in College Park in Orlando, but I think you were maybe talking about one that might be in Georgia.
Slightly different College Park. Yeah. Brett, have you ever been to the College Park that I'm talking about?
I have.
You have? All right.
Yeah. Some good high school football played there.
We got a stabby version.
Yeah.
We're looking at a portfolio of deals that are just in such like backwards fucking nowhere locations. that I was talking to a guy on my team, and I said, we're looking at a deal in Jacksonville. And his immediate question was, which Jacksonville? Because you've seen so many, there's like a Jacksonville, Missouri. There's a Jacksonville, Illinois. Like your brain, if you're not looking at a weird portfolio, would think, oh, Jacksonville, Florida, like the most popular of whatever that name is. We'll say something like, we're looking at one of the deals is in Paris, Texas.
Yeah, I was just going to bring up Paris. Yeah.
Yeah, you have to like really drill into, we're looking in Omaha. People are like Omaha, Nebraska, and just like, no, Omaha, Arkansas. It's like a town of like 31 people.
I got to have dinner this fall with a guy, got to be one of the best real estate investors in the country, Andrew Siegel, and he was buying buildings in Texas in this early 90s period, $5-10 a square foot. And that's when the stuff's that bleak. And you say there's a fundamental reason that somebody would, if you applied that to office, the idea there's a fundamental reason for somebody to want an office here. And I think for him at that point, it was like, no, there's nothing. There's, and it's only getting worse, but this is $5 a square foot. And at the time, it's not like he had a ton of experience, but he was like, this is so cheap. And then just went about the way of being completely bootstrappy and entrepreneurial of saying, here, I've got a building, come put your desk in here and give me, $20 a week or something.
His leases were like 2 pages. Yeah. The guy's brilliant. Yeah, he was like way ahead of the curve. Office leases used to require attorneys, and it was a stack of paper. And Andrew just had this idea of like, I'm just going to scrounge together people. The lease is going to be a page or a page and a half. Yeah. And we're going to fill the place up.
It's one of the reasons I like working the residential side of the business, Eric, is those leases, to Elliott's point, you have to do a lot of reading, and I don't know what half that stuff in there means.
I don't know the word.
I don't know the words. Those are no SAT words that I know. I'm sorry, we're going to gross up the CAM deal. Tell me more about that. Anyway.
So I think if we're this is perhaps a great segue. If we're talking about strange office and a fundamental understanding of why people want to live there, should we head back out to the West Coast? So I always think of, while Brett's pulling this up, this great scene in The Sopranos. Whenever someone's talking about California, and there's always some insane regulatory thing where they're about to pass, they're going to step over quarters to pick up nickels and do the typical California thing. And Tony Soprano's talking to his sister Janice, and she's trying to explain something to him. He goes, no, I don't want any of that California bullshit. That's exactly what I think of anytime we pull up a deal in California. So in another life, I used to live about a block from this building. It's called the Binoculars building, or that's what everyone calls it. It's in Venice Beach. I lived in Venice at a time when Venice was super gritty and all the yuppies hadn't moved in there yet. Venice is still pretty funky, but it was extra funky when I was there. And I would walk past this building on my way to Gold's Gym. And it was a pretty cool time. So I don't know anything about it as an office, but looks like, it's triple net leased by Google, so they've got the whole property. And I would be curious, this is probably as credit of a tenant as you're going to get in this market, what you think this thing trades for, because I think, to me, even a lot of triple net leases at some point, if you've got a Walgreens, and Walgreens moves out, you very much got a fucking Walgreens in Des Moines, and you're like, what do I do with that? But like, even if Google vacates, I think you're still happy that you own this building. This is prime real estate. That's my take anyway. So, Eric, I don't know how you feel about this kind of thing.
Oh, this is as good as it gets, Silicon Beach kind of world. But this building, I think of, and I'm sure there was some nod to it, but that sort of, I think they call it roadside vernacular of like the buildings, and you'd see them like California Route 66 with like a restaurant shaped as a hot dog, or like a teapot or something. So this Binoculars building has a big ass pair of binoculars as the front door in one of the most vibrant hop-in places, expensive places in the country for sure. And so if you want to own an office building in a world of commodity properties and you want something differentiated, we got you.
Hey, that's exactly right. Well, I think, Elliott, I think you brought up a good point there in terms of these triple net deals. You're essentially buying the credit of the tenant. So Walgreens, you feel good about, right? I mean, here you got Google, you feel really good about that. But I mean, it wasn't long ago where there was a bank on two hard corners and a CVS and a Walgreens on the other two. And that was what was perceived to just be going forever. And now you're seeing bank branches going out and some of these C-store, some of the Walgreens, CVS is going out. So I do think, yes, you're buying the credit, but you got to play the downside game of what do I do if these guys leave?
Right. And I think, so some background on this building. This was built in the early 90s for a marketing firm, Hyatt Day, which I think has since merged. But Frank Gehry, I believe, designed the building and built these crazy binoculars out front. I think that this deal is going to trade at an eye-wateringly low cap rate.
Oh, yeah.
Because, one, you're getting a credit tenant in there, but two, you kind of look at this as a way to leg into some great real estate. I think you're going to hate the yield for the first 10 years, but then if you sort of hold your nose and get through it, you've probably still got Google in there paying you what at 10 years from now is probably a great rent. You're happy about it. But even if they move out, you've got control over this very large parcel in a super attractive part of town. Like it would be amazing. I don't know what kind of insane regulation California could pass that would suddenly make people not want to live there. Like Florida, I don't care if you can't get home insurance in Florida. People are still going to live in Florida. People will figure it out. People will it does not matter. People will leave their RVs on the beach. They are going to live close to the water. And the same is true for Southern California. You are going to figure out how to live here. You're going to be nearby. There's going to be office demand. So,
and it feels
probably
like
a rare trade.
It does feel like there's these glimmers of hopes. Like if you think about how successful California has been over the past, 100 years, 50 years, and over the past 30 years or 20 years, absolutely with both arms tied behind their back of this self-inflicted punishment. If you tried to run a state in a way to make it as difficult as possible to have economic growth, they've checked all those boxes. You couldn't do it. You couldn't do any more harm, I don't think, to an economy from a
they've mastered it.
And despite that, the place is out of control.
Right.
And so, and it feels like there are these, to me, green shoots of change, of just letting their foot off the gas a little bit. and I think if that does indeed happen, buckle up, because California can take over the world.
The thing that I always think of when I think of California, there's a lot that I think of. You ever meet a guy and he says, "Don't worry, man, I'm not going to fuck you over." And you're like, "Well, that wasn't even on my radar until you said it, but now you actually very much seem like a guy who's about to fuck me over."
Right.
The thing with California, doing business with California, is the state will say "Don't worry, we're not trying to make your life more difficult." And you're like, well, I have a feeling there's some new legislation coming.
Yeah, it's kind of like it's not a matter of if you're going to move the cheese. It's just when and how far away.
Yeah, right. This deal is about 34,000 feet on a little less than an acre, 3 stories. And they're saying it's the only full cafeteria campus in Venice Beach area, I guess. So about 5.5 years remaining on the lease. In-place rent is $3 per foot per month, triple net. They're, of course, arguing that you're under market. Maybe that's true, maybe that's not. And I guess the way you're looking at this is you're hoping Google stays, but you're pretty confident that if they leave, you've got 6 months of downtime and some CapEx before you've got a new user in here at the same rate or better. It feels pretty good.
And I would say the back to work dynamic or back to the office dynamic, which I think a lot of the tech firms in California are doing. I mean, it is interesting to me for You go to New York or you go to California now, and there's more people going into the office there than a lot of places in Florida. Yeah. Which is kind of it doesn't really reconcile, right? It's counterintuitive based on how things have played out here. But I mean, I think this back to work dynamic is going to be a very interesting ripple effect throughout the real estate industry as well.
I love this building. I think it's of a size that's, it's not like a 1 million square foot building. Right. Thing. This is a bite-sized piece and one of the most, in a fantastic market. I think what's going to make this one tricky is that rent is quite low. They've got 5 years left. You have,
they have a 5-year option too.
Yeah, you have no credit risk, or you have a limited credit risk. You've got 5 years left, but they've got a 5-year option. I don't think it says what that rate is.
Yeah.
So what's going to happen is if they stay, this is one of those things where if they stay, it's bad news, and certain people are going to have to try and make the bet that they don't exercise, and your rent doubles or triples in 5 years. And you're going to price to win this deal. You're probably going to have to price it as such. And then your downside is you got to wait 10 years to kind of get to a re-rating on it. So that'll be really fun to see. Because I can't imagine this trading in a way that the yield is exciting. I think it would be.
No, I wouldn't think so.
It's going to be quite unpleasant. Distasteful on the tongue, as they say, and you're gonna be eating shit for 5 years waiting for the new rent, but that might just go to 10 years. 10 years, a long time. So that's going to be the trick on this one.
Well, how about you don't know what their annual rent bumps for a triple net lease? I mean, that's good, right, for the owner here. I don't recall those resetting annually, but I could be completely wrong about that.
Yeah, the question is whether the renewal option is a renewal at the current rate plus 3%, or if it's some kind of renewal at market.
So I think the first investment highlight up here says the contractual base rent increases 3% annually, which I do think is rare for these triple net lease properties to have annual.
It says right here, Google has one remaining 5-year lease renewal option, also at fixed rents, which are a continuation of the annual 3% increases. So there is no mark to market here.
Nope.
Yeah. So I think that the prudent investor would do a present value of getting to some future much higher rent in 10 years and then discount that back and get a reasonable rate today. And that prudent investor would not win this deal.
Right. I feel like we say this a lot on these let's just say the risk on this deal is pretty low compared to some other opportunities in the commercial real estate business. And so if you look at kind of foreign capital in California, I agree the yield going in here is going to be distasteful at the tongue. But I think the person who ends up buying this is just like, well, I know my money's going to be here in 5 years or 10 years from now. Like, if I make more money than I think, great, but at least I know I can come back in 5 years and all my money's still going to be here. So it's kind of a return of capital play for some of the foreign capital or foreign investors.
You have to figure out what your CapEx could be over the hold, because you've got fixed income, but sort of uncapped potential downside on that. I mean, there's some concern, but your cash isn't going anywhere. It wouldn't shock me if this traded below a 5 cap.
Oh, I completely agree with that. Yeah. I would be surprised. That wouldn't surprise me at all.
Also interesting because just the timing of it is longer than the fund life of most sort of, typical partnerships. Getting out there, stretching this out to what might be, you got to be prepared to own this for 10 years.
They're going to renew. If you look at this map right here, there's one parcel that is for sale, but there are, it looks like 3 other neighboring buildings. They all abut. And the idea that they would sort of not renew the one parcel of 4 that are all contiguous seems really unlikely to me.
I agree.
They would just sort of relocate and find new space in that market. The total footprint here looks like 50,000, 60,000. So you're at 110, another 30 or 140. You see, they've got like 160,000 square feet that are all pretty contiguous. You're buying a piece of a larger thing. It would shock me if they did not exercise that option.
Also, that this quite likely or possibly you could be your counterparty or your bidder on this might be Google themselves. They bought Chelsea Market at a monster number.
Good point.
You could see them coming in and doing this, or they could be your takeout.
Well, and I mean, it does seem. I mean, they're making a case for the ample parking throughout this executive summary, and I mean, Eric, I'm going to ask you this. I mean, this does seem like a ridiculously well parked block for Venice Beach. Yeah, you got a lot of parking. All right, let's think of it this way. Let's reposition yourself as a Greek shipping magnate that has that you need to get $7 billion out of the country in the next 30 days. How much is too much to pay for this? Ooh. I think if you have $7 billion, you wouldn't want to spend all of that. But I mean, at that point, you're going to buy this at a number that does not move the needle for you if you have $7 billion. But so I guess the question is, how badly do you need to get that money out of the country or to a safer haven? Yeah. U.S. real estate, high quality U.S. real estate, high quality tenant with a big potential upside in either 5 or 10 years. You got rent bumps along the way. Do you go into that at a 3% initial yield? Is that a 2%? Is that a 10%? I think that thing gets down into the very low single digits. I definitely think under a 5. It's just how low will you go? And because the other thing is, even if you take that $30 rent, this is going to be really interesting because the intrinsic value of that building with that low of a rate, on a price per square foot, you're stealing it even at a 4 cap, something like that. Right. So, what do you think this trades for just on a per square foot basis, in a vacuum without Google here? I mean, is this $750 a foot, or is this $1,500 a foot, somewhere in between, or anywhere in that range, maybe? Yeah, and then who is that buyer? I mean, the institutional yield driven buyer. They can't get there. The pension folks, I don't see them doing that. The fund manager, I don't know. This seems like ultra high net worth kind of thing, if not Google themselves. Yeah, I think Google is a good call. Or Apple, just to jack with them. Right. Then that would be the bidding war you'd want. So what do we think the NOI is here? I guess if you just take the rent of $320, so it's $3 million, and just assuming there's no expenses, right? I mean, that's not 100% true, but just a triple net. It's a triple net means that the tenant's responsible for common area maintenance, taxes, and insurance. So those are the big ticket items on a operating statement or P&L, right? Turns out. Yeah, right. That's kind of a big deal. I don't know, Elliott. Are you? Where is your head on it?
I think it probably trades between 75 and 80 million.
Yeah, that's exactly what I just backed into.
I think that's probably right. And I think two things are true at the same time. This does not make sense for me or most people I know. It also probably makes a ton of sense for the right buyer. Mm-hmm. And I think if you're in a position where you are just looking to park some cash, and you think about total portfolio construction, you want a few things that are super safe in a market you like, I think you could put some here. I think there's worse places to put a pile of money.
Yeah, I think the 75 to 80 number is kind of in the range I just backed in. So I mean, that's $1,000 a square foot.
Yeah.
Right.
Okay, so you do that and you say, man, that's a crazy number. I'll tell you what I think. You put the California floater on top of it, add 20% to that number.
You think it's 100?
and then add 10% to that.
Yep. Yep. Like you could very well be right. It'll be a fun one to track.
Yeah.
It's a cool area. Gold's Gym is right behind it. The original sort of Gold's Gym in Venice.
Let's get
great restaurants all around.
Let's make sure we got staff working on this to track it and come back to it.
We'll have some of the support staff track this over the next couple weeks here to see how offers come in.
Yeah. Well, I like it. I think I'm a buyer.
So what do you do? Is there a bell?
I think so. Yeah. I think we're all buyers here.
We did it.
Good one.
You damn right.
Like
super unique. Good vibes. We haven't dropped good vibes, but definitely unique.
Good vibes.
And vibes.
Yeah, I like it a lot.
Yep.
All right, gents. This has been fun.
All right, guys.